Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can understand what we see in the global landscape. You know, we're starting to see interest rates rise slowly. I've talked about this for probably the last year or so, that we need to expect rates are going to go up as the economy does a little bit better. And we've been spot on. Rates are starting to move up. We saw kind of a bottoming this year of around 1.85 in the 10-year, and now we're better than 2.35. I have repeatedly really warned investors who listen to my TV and radio shows about look out for higher rates. It's going to hurt your bond portfolio. In fact, we're looking at the 20-year Treasury, the TLT, or an ETF that basically buys long-term treasuries, really has dropped about 6-8% just in the last few months. So bottom line is this: if you're not a client of our firm, you better seriously look at your portfolio of bonds or bond mutual funds. Expect to make either mediocre total returns or losses in your bond portfolios going forward. How big are those losses? It depends on how fast rates move up. The bottom line is this: always look at total return gain or loss in the value of your bonds plus the dividend you receive. That's total return. Too many investors do not understand bonds and they perceive bonds to be safe or bond mutual funds. Bottom line, rates move up, bond values drop. We're at some of the lowest rates we've ever seen in history. If the economy continues to expand and get better, if the world economy gets a little bit better, expect rates to go up. Best way to explain buying bonds right now in a low interest rate environment: trying to pick up a dime in front of a 20-mile-an-hour steamroller. Very risky. Little reward, don't do it. Look at floating rate securities, look at short duration, 2-3 year bonds maximum. You'll make less money, you'll get a little bit more protective portfolio, but at the end of the day, growth is going to matter over the next 5 to 10 years. So whether you're 80 years old, you're 70, 60, or somewhere in the middle, total return, growth and income of your overall portfolio is what's going to matter. Too many investors are over-invested in bonds, and we see that every single week on my TV and radio show. If you're a client of my firm, give our office a call if you have any questions. If you're not a client, maybe it's time you became a client. Have yourself a safe and profitable day.